Hi, I'm James Dunn. Welcome to the Inside Network. Welcome to In Depth, where my guest is Travis Prentice, co-founder, CEO, Chief Investment Officer and Portfolio Manager, US and Global Equities at EAM Investors. Welcome, Travis.
Thank you. That was a lot.
Well, I was going to ask. Your title is quite a mouthful. What does it boil down to?
It boils down to producing great results for clients. That's the whole reason we exist.
Travis, when you talk to Australian investors about small caps, obviously the parameters of what's a small cap for an Australian investor is vastly different to what's a small cap for a global investor. So take us through those parameters of your universe of capitalisation.
Yeah, so we look at small cap and we define small cap by the MSCI ACWI Small Cap Index. And so that range goes from the very small, call it 100 million, all the way up to about 17 billion US dollar market cap. But really the sweet spot of global small cap would be 500 million market cap USD up to about 10 billion.
A lot of investors might believe that if they're benchmarked and weighted according to a broad global index, they're going to be getting small cap exposure. Do you think that's a flawed view?
No, not so much flawed, but I would think the power of small cap, and we believe the right approach to small cap because of the exposures and just the characteristics of the marketplace are such that active management has a good probability of working well. So it's not about just broad exposure to the 11,000 small cap companies out there, but picking ones that actually have a future and alpha and opportunity. So we think small cap is a place where active management can work quite well.
EAM Investors is a relatively small operation. How big is your team, and what do you think is the size that you really need to be to cover such a large universe of opportunities?
Well, it depends on what you're trying to exploit in the marketplace in the first place to produce results. So what we have is we have a 15-person investment team laser focused on exploiting the premium of momentum in the global equity marketplace. So we use a great deal of technology to narrow our selection universe, then to focus our company analysis very efficiently.
Do you have to really wear out the shoe leather and build up the miles to go and see companies? What happened in COVID? Could you actually assess a company over Zoom, or do you have to eventually sit across the table from management?
Not necessarily. Again, it depends what you're after in terms of how you're going to add value for your clients. But we've always used a systematic approach, utilizing technology to narrow that selection universe on the signals of alpha. So from that perspective, we have found that to remain objective is really the way to find that best idea in such a vast opportunity set. Because you're talking about 11,000 companies that make up the small cap universe. So you could imagine no matter what the size of your team, you can't know everything about every single company every single day. So technology really allows you to narrow in on the alpha opportunities.
So from 11,000 stocks in the potential universe, how do you winnow that down to what's the size of your shortlist, and ultimately, how many holdings do you have?
Yeah, so we don't have a short list. Our process is dynamic, meaning that it's done every single day. And what we're doing are capturing the momentum signals, or capturing the signals that have historically been associated with outperformance. And so from there, we get a handful of ideas every day, looking at the world country by country. And from there, we're selecting, and for inclusion in the portfolio, of about 100 to 150 holdings out of that 11,000 stock universe.
And you've got an interesting adjective in front of momentum. Informed momentum is the EAM approach. Take us through how that works.
Sure, it's all about harnessing the power of momentum to produce results for clients. So we know momentum is a fantastic place to start, right? It's the best factor exposure you can have in global equity markets empirically. So informed momentum is basically translating that academic opportunity into actual real results. So from theory to practice. And the way we do it is to start with momentum, but then add rationale. So we're very focused on why a company is doing well. And then lastly, informed momentum is about managing risks aggressively. And so we manage risk tailored specifically to our value proposition. So informed momentum is that combination of starting with what works, momentum, adding rationale, and then risk management to produce outcomes.
So in your view, informed momentum is the most effective approach an investor can take to the global small cap universe?
Well, empirically, momentum exposure is the best performing factor premium, so it's a fantastic way to start. But momentum may be simple in theory, but it's actually quite difficult to do in real life. There's a lot of challenges you need to overcome, and that's really the basis of informed momentum, is the process by which we translate that opportunity into actual positive outcomes for clients. So it's all about starting with what works well. It's a fantastic place to start, right? We think an investor should always have part of their portfolio in companies doing well now. And that's really what momentum investing is.
Once you've identified momentum, how long does it take you to build up the case, the rationale that you were talking about that is the informed momentum approach?
We can be quite efficient because obviously we're fishing in a great pond to begin with. So the momentum signals we're capturing, those companies tend to outperform for the following 6 to 12 months. So from an analysis perspective, we got to be very focused and targeted in terms of the company analysis we do, because momentum premium, while it's persistent, robust, and pervasive, it does decay through time. So the best alpha proposition on momentum investing is from month 1 to about month 9 or 10. So our research process has to be efficient to optimize alpha.
So what does that flow through to in terms of average holding period?
So our average holding period is about 6 to 9 months, and that's right within where we'd want it to be in terms of the dynamic alpha opportunity from our style of investing. So momentum is a discipline where you need to be efficient, you need to be quick, and you need to move on when the signs tell you to move on. So a discipline around the sell side is extremely important to extract that premium.
It sounds logical and it sounds relatively easy, although I know it wouldn't be in practice. So what is the reality of using this approach?
Well, momentum strategy done well, it takes extreme discipline. And we talked a little bit about emotion, but you have to get emotion out of decision making and really focus on results for clients. And I think when you do that, you have the discipline. A well-executed momentum strategy will have actually very favorable risk-return characteristics. And it comes from that discipline in terms of finding optimal buy points, so companies on the right side of trend, and owning those until that trend stops.
So is turnover high?
Well, turnover in any momentum strategy needs to be optimal, meaning relatively speaking, your ownership of a company to extract the best momentum premium is about a 9-month holding period. So from that perspective, a well-executed momentum strategy needs to have turnover somewhere in the vicinity of 150 to 200%. What you don't want is a momentum strategy with no discipline on the sell side, no turnover.
Do you build into positions, or is it just make the decision and go all in on the holding at one point?
We buy it right away. We think the best alpha opportunities are the ones you see, and when you see it, you need to be there, because from a momentum strategy perspective, the highest alpha opportunity is actually in the beginning of that trend. And so we want to amplify the opportunity by being early and then riding that momentum or riding that trend until the trend stops.
Travis, in your view, what makes global small caps so compelling right now, second half of 2023?
So small cap historically anyways has tended to lead into corrections, but then lead out in recoveries. So why global small cap now would be that, well, we've been in a downtrend for small cap. And so right now is a fantastic opportunity to exploit the recovery. Now, who knows when that will be, but small cap tends to outperform and leads out in recovery scenarios.
This has been In Depth with Travis Prentice from EAM Investors. Thanks very much, Travis.
Thank you.